Last Sunday we did our week ahead video, and everything we talked about in that video has played out pretty damn accurately, to be honest. Great week for most people. I've enjoyed every moment of it. There has been unbelievable first ever types of history making moments as well to get through. So we're going to have a quick recap of last week, and we're going to have a look at the big winners coming up this week. What is the crack, everyone? Welcome back to Buy Hold Sell. Hope of course you're all well. We have so much to get through. First off, what a week we have had. Let's get straight into it. US equities surged on Friday, lifted higher by strong earnings and higher than expected consumer spending growth. The Dow rose for its sixth consecutive session, ending the week nearly 6% higher. The S&P rose 4% of the week, while the Nasdaq gained over 2%. US Treasury yields fell throughout the week, with the yield on the 10-year note hitting a low of 3.9% before rebounding close to 4% on Friday. Oil prices rallied this week amid speculation that OPEC and its allies may cut production further to support prices while global supply remains tight. We also had Elon Musk finally completing his $44 billion deal for Twitter. I've covered it in my other video, share the link to it. Did this at the time, why Twitter is such a great thing for Elon. He is going to now not only have free advertising, he is also going to be able to push out whatever type of narrative that he would like, i.e. get us to space, let's get Mars built. I can't believe I'm saying this, is crazy, but this is what Elon's about. We're doing everything, he's doing everything on Earth now so he can take it all to Mars and live there. That's what his goals are. It's unbelievable, and Twitter is a big part of that plan. You can see here, commodities still reasonably high. Oil's pulling back. A couple of things happening in the UK for people that are looking to buy oil. What you're seeing is the pound getting stronger, the dollar getting weaker. You're seeing, while the commodity itself is holding quite strong, you're seeing a bit of a shift here. Plus, I read a report today that the UK could be getting possibly 22 degrees at the end of October. It's not that cold right now, so a lot of people aren't burning oil as they maybe normally would have. Dollar is dipped a wee bit, as we can see on the week. And all our sort of stocks, investment bonds, all that is still looking quite tight. And we've had a decent rally in Bitcoin, all which we'll get into in a moment. Also, I have Argo and ABML videos recorded, ready to go. They'll come out on Monday and Tuesday, so stay tuned for them. Welcome to all the new elite course members as well. Well, shout out to you all for joining in. You are all very much welcome. You are joining a good group of people. What a week we have had. I talk about TLT, which I'll get into in a moment. We bought into Amazon, we bought into Meta on the dips, and they've all ripped hard. And I decided to hold all my buys for this week over the weekend. In my last video, I said, not going long on anything. I'm done with it. Well, guys, things change. Didn't expect the earnings to come out for Amazon, Apple, Google. Jesus Christ, these things sunk like a stone. I read a statistic, again, shared it in my Discord. Amazon's market cap is down 233 billion in the after hours. The biggest single after hours market cap drop in history making market cap drop. Unbelievable. What the side note was, Meta's entire market cap now is currently 263 billion. So pretty much Amazon got wiped off what Facebook's market cap is. That's unbelievable. Like, see, for these types of market caps to shift 20% in the after hours, this is not retail. This is pretty much institutions. The after hours, that is some serious, I mean serious selling power. There was a lot of talk about it. I just kept saying, I'm foaming at the mouth here. I cannot believe, the lovely little graphics here, people dancing. People have been putting in their wish list. I say, like all the big boys, I am all about them, and I'm already starting to average in. These are the types of prices that I've been wanting. These are the types of prices that I have been calling on this channel for the last year. I've been saying, guys, bear market. I'm not going to consider until these prices get to these. I still think there's a lot lower to come, but anything under $99 for Facebook, even with their growth struggles. Now, something that we've talked about in the last week's video was the likes of Coca-Cola. The earnings smashed it, no surprise. Consumer staples, there's difference. People have said, oh, you don't want to get out, you want to get out of retail sort of sectors. You don't want to be buying these types of stocks because shop businesses will close and all this. I agree, businesses will close, but the big staples, McDonald's, Coca-Cola. I've read an article yesterday, McDonald's is crying, we're going to have supply issues, the world's going to suffer. Trust me, the world is not going to suffer. People can't buy Coca-Cola and McDonald's. It's probably going to be a good thing. But that aside, as long as supply issues are okay, Coke, McDonald's, Kentucky Fried Chicken, baby, my favorite, all of these things will be fine because people just go to them. That'll never stop. Even the poorest of men, you see, where are they? In McDonald's. That's where they go to get food. Those places are always going to be fine. They adjust their prices, increase it, They cut down on ad revenue because it's such a big brand name, they don't need to do any of those things. So not, as I said, they're starting to see what I expected. The staples are doing well, and they are. I opened the Dollar Tree special. I opened up Dollar Tree, put my alert into the Discord that I opened it up on the 24th. And if we look at Dollar Tree, 24th, up to the highs and low, 13%. 13% on a Dollar Tree is phenomenal. Did my video previously on the staples, not going to go into it. Dollar Tree in the last recession in 08 went up 100% that year. The next thing I bought then is TLT. I actually sold Bitcoin, some of my Bitcoin hodl, very small, 5%, at $20,500. The reason being, I've been toying with the idea for about 6-7 months, probably should have done it. And I just thought TLT's finally become a buy. Cover TLT on the channel. I'll hold my hands up. Hold my hands up. Got way too early on TLT. But TLT has finally become a buy. I mean, look at this thing. It's fell 20%. No, not even close to getting a buy. Buy has come in. This thing cannot really fall, in my opinion, any lower. Look at this. Look at this. Like, honestly, this is crazy. This is debt. Debt is 5 times bigger than the stock market. It's back to 2013 lows. To me, not saying it's going to happen overnight, but this has the potential for a 50% rise. I opened up my position 5 times leverage. I've sold some of that Bitcoin, bought more, topped up my position. I'm in on TLT. We will see. Look at this. Look at the last time it was low, 21 March. What happened? Rallied. Went down to this level. What happened? Rallied. Went down to this level. What happened? Rallied. It just goes down to these levels and rallies. Even here, April, what did it do? It went down and it rallied. Not financial advice. Even if you want to get in, we only paper trade. I don't actually trade real money. This is all just make-believe. So do whatever you wish. I am still short on this market. The reason I'm still short is because it's a nice hedge. Until the markets go bullish, I am changing nothing. There's a lot of people now going, we're going back to the moon. The bear market's over. I'm not buying it. Too much bad news out there. We haven't even felt half of the issues. Unemployment, people are maxing out their credit cards. Open your eyes, you will see all these issues are starting to unfold. That will have detrimental effects down the road. It will. This is some of the longest sideways markets in history. Imagine your money did nothing for 4 years. Imagine it did nothing for 12 years. Look at the worst time ever. 15 years your money went sideways. 15 years. Imagine you bought Amazon. You're like, right, happy days. 12 years later, it was still at the same price. The only difference is instead of having £100, you've now got 10 grand worth, but it's still sitting there. It's no different than your bank. Actually, let me reiterate, you're better off putting your money in the bank. And that is not something that you'll see too many people on YouTube say, don't invest, put your money in your bank. That is the reality of it. Yes, in 12 years time, it went to the moon. You'd be laughing. You've accumulated a lot of money at the lower prices. There is that argument. But the argument is, if you don't know when you're buying, who's to say you're not buying the whole way at these high prices? I'm going to show you right now. If we go back to this area here, the sort of late 1960s, you can see this area here where it just went sideways. What you could do if you were a trader is at least understand when to buy and when to sell. When you buy is these areas. Free one. This is in the course, but this is a free one. You buy here, you buy here. These are the areas you wait on. These are the areas you want to be buying, especially because you do not know how long this next sideways market is going to go. I anticipate this being the next sideways market. It could be longer than 15 years, it could be shorter, but I believe we're going to go into some sort of sideways market. We're already a year deep into this bear market. You just learn how to trade, and there's so many indicators. You can just stay right on the right side of the 180 day. That is bullish. You can look at the RSI, you can look at the MACD, there's so many different things. I like to combine them all. You can get access to the buy and sell indicators to learn how to do it. Do not let a sideways market stop you from making money. And if you are against trading and you just want a dollar cost average, at least know when to buy. If you buy every month dollar cost averaging, you're missing out on so much opportunity to make money. I can't say it enough. Load of earnings. If you want to look at these here, feel free to pause the video. The video is running on, so I'm just going to skip through it, but you can have a look at there and see. As always, I'll be sharing the earnings into the Discord anyway for everybody else, so don't worry, if you're in there, you will get that. It's all to do with earnings. The key one that I'm looking for here is Airbnb, and I'm also interested in PayPal, because PayPal have done a lot of dirty things at the minute. They're taking money out of people's accounts for free and stuff. They're getting a bit of a slap wrist, so we're interested to see what happens there and what their output is. Here we go though. Fed rate hikes starting on Tuesday. So the reason I've held my stocks again is because I'm hoping that Monday will be yet another run. The markets look strong. GDP last week was actually really, really good. The housing was poor on Thursday. All like I said last week, we're starting to get ahead of it. We know, anticipate what's happening. The housing market's going to crash. That's going to go off the cliff. Car loans are starting to go off the cliff. These things are going to start hurting jobs. Is the US economy still adding jobs? This is going to be huge. The labour market will become available next week on Tuesday, and then on Friday, market watchers will receive what could be the most important indicator of the health of the labour market, as the BLS will release its non-farm payrolls report for October. The US economy is projected to have added 220,000 jobs in October, which could mark a slight deceleration from 263,000 gained in September. Job growth has slowed in recent months as the Federal Reserve rates have increased, as you'd expect. The unemployment rate is projected to tick higher, 3.6, up slightly from the current 3.5. They are expecting to pull back. That's what happens when interest rates go up. That's what happens when tightening. People are losing jobs. People are finding the financial pinch. If that is better, the rally could continue. If it's worse, the market sinks. And the same with the rate hikes. If they are bearish, they are more hawkish, it's going to sink. It's a very nervy market right now. It could literally go either way. It's up to the Fed. If they want to pump it, they can pump it up. If they don't, it's going to gape out. And for me, just like I have been, I'm going to be very cautious. Monday will be my last, I'm hoping my last real day of holding my long positions. I'm going to trim them definitely on Monday. Maybe keep a wee bit there because I am up considerably on my Dollar Tree, my Meta and my Amazon. And I'm up now on Tesla as well. So I'm going to be keeping them tight. And the last thing I want to just report on then is just the general market. Now we can see here, we've been bouncing on this line. We've been covering this for over a month now. It took a while to get going. We have seen that jump, but we've also seen the wick hit this sort of support level and dip. Very keen to see what happens on Monday. I put in all my TA in the Discord. You know exactly where we're sitting with things. Things are looking a bit tight. Are we going to get above this support level? I definitely don't foresee us getting above the 180-day moving average. If you want more details, it's all in the Discord. Feel free to join that. If you want to learn the trade, all this wonderful stuff you're seeing behind me here. Look at all this, guys. You can get access to it all. Learn the trade. The winter sale is now on. Get the discount. Get in. Learn this. Best money you'll ever spend. You can trade on the weekly, the daily, the hourly chart. You could even just sit on your pooper once a week and just sit and go, right, what's my trades looking like? 10 minutes later, you know how your trades are looking. By the time you've used your second sheet of paper to wipe your hours, you have completed your trading for the week. It can be as easy as that. And I guarantee you, even if you do that, you will maximize and protect your money so much better than someone's just dollar cost averaging. That is not what big institutions do. Get with the smart money. Think about the elite. Get in. Do that. Catch you in the next video and check out this bastard and thing. This is about Elon Musk, the misunderstood Elon Musk. He very much is. Great documentary on BBC as well. I've finished the 3-part series. If you're interested in watching that, it's all on YouTube. And I will catch you in the next one. Trade safe, guys. Peace.